All right, let's jump right in. We're tackling a big question that a lot of you have probably thought about if you're looking at the UAE market. Is Etisalat stock a smart buy for your portfolio? We're going to break it all down to see if this telecom giant really deserves your investment. As an investor, you're always trying to find that sweet spot, aren't you? Something that gives you that nice, steady income, a paycheck you can count on, but that also has some real sizzle, some genuine growth potential. It's that classic tug of war, stability versus the future. Well, the company we're looking at today might just be the answer to that puzzle. So to figure this out, here's how we're going to do it. First, we'll get to know Etisalat and see why it's more than just a phone company now. Then, we'll check out the price tag and the paycheck, basically what you pay versus what you get. After that, we'll dig into the bull case, all the reasons to be excited, and then the bear case, the risks you got to know about. And finally, we'll wrap it all up with the final verdict. Sound good? Let's do it. Okay, first things first, let's really meet Etisalat. And the subtitle here says it all. This is way more than just a phone company. You got to get that old image of a sleepy utility out of your head. They've changed. So where's the money really coming from? Well, you've got the core telecom services, of course, but look at this. International operations make up a massive 40% of their revenue. That's huge. It means they're not just dependent on one market. And then you see this growing piece of the pie, digital ventures. This is their ticket to the future. Think fintech, cloud, all that good stuff. This is where the growth story is. And the scale here is just wow. We are talking about over 170 million subscribers in 16 different countries. Plus, they're majority owned by the Emirates Investment Authority, so you know they're a key player in the UAE's long-term plan. But this is the killer point. They are actively evolving into a technology investment group. And that's not just talk. Taking a nearly 15% stake in a global player like Vodafone, that's a power move. It shows you exactly where their ambitions lie. Okay, moving on to section 2, my favorite part, the price tag and the paycheck. Or put it another way, what's it going to cost you and what are they going to pay you? This is where we get to the numbers that really matter. And bam, right out of the gate, here's the number that gets any income investor's attention. An annual dividend yield of around 5.2%. Let's be real, in today's world, that is a seriously attractive paycheck you get just for being a shareholder. So, is it expensive? Well, let's put it head-to-head with its main competitor, Du. You see, Etisalat trades at about 13 times its earnings, while Du is a little cheaper at 12. So you might ask, why pay a premium? Well, the market is telling you it's worth it. You're paying for higher profitability, and there it is again, that crucial international diversification. Du is pretty much just a UAE story. So what happens when you combine that sweet 5.2% dividend with the growth we expect from their digital and global businesses? Well, the analysis suggests you're looking at an expected total return of somewhere between 8 and 10% a year. Now that is the powerful mix of income and growth we were talking about right at the start. Okay, so we know the company, the numbers look solid. Now let's build the bull case. What are the core strengths? Why should you really consider putting your money here? Let's lay out all the arguments for why this is a good investment. The analysis points to 6 key reasons to be optimistic. Number 1. They absolutely dominate their home market in the UAE. 2, they have incredibly strong cash flows. We're talking high margins here. And that's the engine that powers those reliable dividends. 3, they're diversifying into exciting new areas like fintech and AI. 4, that international footprint we keep talking about, it spreads the risk. 5, they're making smart partnerships like that big Vodafone stake. And 6, they have solid government support, which creates a really stable foundation to operate on. But hold on, a smart investor never just looks at the upside. You gotta flip the coin over and look at the risks. So let's dive into the bear case. This is the stuff you absolutely need to think about before you hit that buy button. So what could go wrong, right? Every investment has potential headwinds. What are the things that could knock Etisalat off course? Let's get into it. Now, this is a fantastic way to look at it because we're not just listing scary risks, we're seeing the company's game plan to handle them. So you've got competitive pressure, sure, but their premium brand gives them an edge. You've got currency and geopolitical risks from being all over the world, but having so many different markets actually helps balance that out. There's a risk they might mess up their new digital stuff, but they have a mountain of cash to invest and get it right. And finally, regulatory risk, well, that's pretty low when you have the government as a major shareholder. So the bottom line is the risks are real, but it looks like they're being managed pretty well. Okay, deep breath. We've looked at the business, the numbers, the pros and the cons. It's time to bring it all home for our final section, the final verdict. So, is it a buy? Well, the analysis we're basing this on doesn't beat around the bush. The conclusion is crystal clear. I'll just quote it directly. Recommendation, buy for a 2 to 3 year investment horizon. Can't get much more direct than that. So let's just hammer home the final takeaways that get us to that buy recommendation. First, this is a defensive leader in both telecom and digital infrastructure. Second, it's considered superior to its rival DO because of that global reach and better profits. Third, it's positioned as a potential core holding if you want a mix of UAE stability and tech innovation. And it all boils down to that killer combo, an attractive 5.2% yield plus that 8 to 10% total return potential. And that brings us right back to you. We've laid out the whole case, the good and the bad, based on the research. So the final question, the only one that really matters, is for you to decide. Is this specific blend of stability and technology the right call for your portfolio?